how to make money these days in property, because things have changed. So what I thought I'd do in this video is just go through the changes, because I don't think there's any need to be negative about it. You may need to change your strategy. So here we go. So between 1980 and 2016, the average was 6.7% rise a year in property prices. Now that's obviously an average, and the property market is a micro market. You know, you might have areas that didn't go up that much, you've got other areas that might have gone up more, but that is just an average, and that's impressive, especially if inflation is lower than that. So and interest rates were pretty low during most of that time as well. So that made buy-to-let as a strategy very, very attractive to people. And in the last decade, the growth has slowed down to 3.7% on average. And of course, in London over the last 10 years, you could argue there's been no growth at all, which is remarkable when you think about it, because the 10 years prior to that, probably the growth was amazing. Certainly since 2010, when things did struggle, it really went up quickly after that. But in the last 10 years, no growth in London really, which is quite remarkable. So what have the changes been? Well, the Conservative government really didn't help. Section 21, Section 24, no interest relief on mortgage payments and all the rest of it. That really has made it much, much tougher for buy-to-let landlords, especially when the property was in their own name. That was the big problem. Interest rates on average went from 3.7% to 5 point, goodness knows what, nearly 6 probably. Then we've had the Renters' Right Bill, which of course has really put another knife into the 2.4 million landlords across the UK. Now in the old days, we spoke about the north of England producing a better yield, in other words, a better return on your money in terms of rentals, and the south where you get more capital growth. Well, actually now that has sort of changed around a bit, and the north is probably pretty good news, and the south has found it pretty difficult with little capital growth. And really what you're looking for when you're looking for property investment, you're looking for capital growth and a good rental yield if you can. Now, of course, rents have gone up substantially. I think they've gone up something like 25% since 2020, which isn't bad at all. But, you know, the capital gain has not gone up at all. So let me give you some ideas of yields, because I think that's important. Yields are the return you get on your money. So Yorkshire and Humberside, 7.9% in the last 12 months. The Northwest, that would be Liverpool, Manchester, very strong, 8.2%. The Northeast, 9.3%, which is brilliant. And the forecast for the next 5 years, by the way, and this is from Savills, so we tend to believe what they say. Yorkshire, Humberside, Northeast, 28% growth in prices. The UK average, they think, will be 22. London, they think, will be 13. I'm not sure London will be 13. I think the rest of the south of England could well be 20% in the next 5 years, but it just shows you and hopefully gives you an idea of where you might like to invest. The other great thing about investing up north, certainly areas like the Northeast, is you could perhaps buy 3 or 4 properties for every one you're buying down south. Now you could argue that's 3 or 4 more headaches, but also you could say, well, you know what, you're spreading your risk a bit. You can always sell 1 or 2 if you wanted to later on, whereas if you're only buying 1 down south, you haven't got that option. Anyway, I hope you find this interesting. Of course, my books are full of this type of information, as is my YouTube channel and my website. See you next time.